Hello everyone, my name is Aditya Chaturvedi and I study at IIT Roorkee. In this presentation, I'm going to compare Tesla with Nissan and explain why Nissan is a better choice of investment than Tesla. Tesla's major business is manufacturing electric cars and lithium-ion batteries. Nissan has a diverse range of products ranging from cars, trucks, electric vehicles and is consistently growing in markets all over the world. We can see from the relative wealth chart history that both Tesla and Nissan are distinct from each other and are at different stages of growth. Tesla has been burning shareholder wealth regularly for asset growth and R&D expenses. Looking ahead, CFROI might increase in the future as the company rolls out its upcoming Model 3 to the market in the coming months. Nissan, on the other hand, has a long history and consistently earned returns well above the discount rate till 2007. Despite earning returns below discount rate after 2008, the company continued growing its assets and expanded its businesses in emerging markets. We can see the asset turns of Tesla has been consistently decreasing over the years, which is an indication that the management is not using the money spent on asset growth efficiently. On the other hand, Nissan has a stable asset turn ratio and operating margin over the years, which makes it a better choice of investment. From the price to book value graph, it is evident that Tesla is highly overvalued compared to its peers in the industry and is overpriced with the hope of future growth. Nissan, on the other hand, is undervalued with respect to its peers. Tesla has an overall accounting rating of poor. It has also increased its number of shares outstanding up to 30% since 2013. It has created a noticeable difference in the value of the stock. There is also a high risk of dilution in the future. It is a cause of concern because increasing stock price is the only way Tesla can return value to its shareholders because it doesn't pay out a dividend unlike Nissan. Nissan, although having a below average rating, has a good amount of accounts receivable which might increase its CFROI. Thus, from my analysis, I conclude that there are significant downside risks for investing in Tesla because it continues to increase its capital expenditures and R&D expenses, which may or may not produce cash flows in the future. Also, there is a high probability that other tech firms may enter the market for electric vehicles, which might increase the rate of fate for Tesla in the future. On the other hand, there are considerable low risk of investing in Nissan due to its diverse range of automotives, stable operating margins, asset turns, and presence in emerging markets. Also, Nissan is currently undervalued with respect to the market. From the flex valuation tool, we observe that even in a pessimistic scenario of fade, when Nissan CFROI fades to zero over the next 5 years, it still has a warranted upside of 45%. Hence, I would recommend Nissan to be a better choice of investment over Tesla. I would like to thank Credit Suisse Holt for giving me this opportunity.